Right now, there is a 70% chance you or your spouse will need long-term care. And when that day comes, you will burn through $185,000 in just 18 months. Now you are probably thinking, that is what Medicare is for. Wrong. Medicare covers almost nothing, and by the time you figure that out, it is too late. I am going to show you 3 things the insurance industry does not want you to know. Things that could protect your entire retirement. But first, quick note. Nothing I say is financial advice. I am just a guy who has watched this destroy families for 30 years. Here is what they do not tell you at those retirement seminars. 7 out of 10 people your age will need help bathing, dressing, or eating before they die. The average nursing home costs $10,965 per month. That is $131,580 per year. Memory care facilities? $6,935 a month. Home health aides run $33 an hour. Just 4 hours a day adds up to $48,180 per year. But here is the thing. The people running those retirement seminars, their government pensions include long-term care coverage. Yours does not. Politicians get protected. You get a bill. Now here is the kicker that makes my blood boil. Medicare. You paid into Medicare for 40 years. You think it is going to take care of you when you cannot shower yourself anymore. But Medicare has a dirty secret. It only pays for skilled nursing. That means when a nurse is actively treating you, the moment you just need help getting dressed, you are on your own. And that 100-day coverage everyone talks about, here is the truth. Days 1 through 20 are free. Days 21 through 100, you pay $204 per day. That is $16,320 out of your pocket. Then it stops completely. After day 100, Medicare pays zero, nothing. So what happens next? Medicaid, but to qualify for Medicaid in most states, you have to be broke. Asset limits are $130,000 for an individual, $195,000 for a couple. That house you spent 30 years paying off, that retirement account, gone. You have to spend it all down first. But here is what really gets me. The wealthy hide assets in irrevocable trusts. They plan decades ahead. The middle class gets squeezed until there is nothing left. Let me show you how this actually plays out. Year 1. Your spouse has a stroke. You try to keep them home. $6,000 a month for home health aides. 6 months later, you are exhausted. They need 24/7 care. So they go to a facility. $10,965 a month. 18 months in, you have spent $185,000. Your retirement account, the one that took 35 years to build, gone. And here is the thing. While you are draining your life savings, the CEO of that nursing home chain just got a $12 million bonus. They profit. You pay. Now, before you panic completely, there is something you need to understand. You have options, but only if you act before it is too late. So what do you actually do? There are 3 paths, and none of them are perfect, but they are all better than doing nothing. Path 1. Traditional long-term care insurance. Yes, it is expensive. Yes, premiums can go up, but it is purpose-built for this exact problem. If you are between 50 and 60 years old and in good health, this is still an option. A 55-year-old might pay $2,500 per year. Wait until 65? Same policy costs $6,000. And that is if they will even insure you. But here is the kicker. Had a mini stroke last year? Denied. Diabetes? Denied. High blood pressure with complications? Denied. The insurance companies are not stupid. They only want you when you do not need them yet. Path 2. Hybrid policies. These combine life insurance with long-term care coverage. You get a death benefit if you never use the care. Your heirs get something. Either way. The catch? Higher upfront cost. You need a lump sum available. But nitrogen monoxide rate increases. Ever. The price is locked in. Path 3. Self-insurance plus asset protection. This is for people who planned early or have significant assets. Medicaid planning with the 5-year look-back rule. Irrevocable trusts, not do-it-yourself. You need an elder, law attorney. And if you are a veteran, VA benefits might cover some costs. But you have to know how to apply. Most people never even ask. Now here's what nobody tells you about timing. If you are watching this and you are 55, you might pay $2,500 a year for solid coverage. Wait until you are 65. Same policy. Costs $6,000. And that is if they will even insure you. You cannot wait until your hands shake to buy. By then, the door is closed. Now, here's the question everyone asks me. What should I do this week? Not someday. This week. Step 1. Pull your current coverage documents. Does your employer offer anything? Any old policies in MI drawer? Find out what you actually have right now. Step 2. Calculate your care cost exposure. Call 3 facilities in your city. Ask for current rates, not the brochure price. The real price. Write it down. Step 3. This is the hard. 1. Talk to your spouse. Not about dying. About living with limitations. Who helps? How do we pay? What is the plan? These are not easy conversations, but they are necessary conversations. Step 4. If you are under 65 and healthy, get quotes. Not from one agent, from 3. Compare policies. Ask these 4 questions. What is not covered? What triggers benefits? Can premiums increase? What is the elimination period? But here's the thing. Most people do nothing. Nobody wants to picture themselves unable to feed themselves, so they avoid it. And then one day, they are sitting in a hospital social worker's office, being told they have to sell their house. You are not most people. Watch this far. You are still here. So here is what you do this week. First, find out what care actually costs in your city. Call 3 facilities. Ask for current rates. Second, look at what you do have. Does your employer offer anything? Any old policies? Dig them out. Third, talk to your spouse. Not about dying, about living with limitations. Who helps? How do we pay? Because here is the final truth. A system is designed to extract your wealth right when you are most vulnerable. But you just armed yourself with something most people do not have. Information. Use it. And one last thing. Before you go, drop a comment. What is your biggest fear about long-term care costs? I read every single one. And if this opened your eyes, hit that like button. Because YouTube's algorithm buries content like this. The financial industry does not want you informed. Prove them wrong. Share this with someone who needs to see it. I will see you in the next one.